So, a little over a week ago, on May 11th, the Bitcoin blockchain underwent its third halving event ever. That is the once every 4 years occurrence, where the miner's subsidy, which awards them fresh Bitcoin for every block found, is automatically cut in half. And this was a much hyped event with, lots of trumpeting and fanfare, right? People painting their faces with Bitcoin symbols like you would see at sports events, right? And this was really portrayed as the springboard that's going to take us into new all-time highs in due time. But the 2020 halving is kind of shaping up to be pretty uneventful so far. Again, a long time frame is required, but price has remained stable in the $9,000 range. We haven't really seen the fireworks or the drama of a catastrophic collapse to the hash rate, although it is down quite a bit, and nor have we seen this massive bull run to the upside. Instead, the Bitcoin community is moving along to the next major milestone for the blockchain, and that is the first scheduled difficulty adjustment since the block reward halving. Expected to take place later today, occurs roughly every 2 weeks. And it's another automatic mechanism built into the network to help block production run along smoothly. And like the halving event itself, the difficulty adjustment that we're going to see is expected to be largely uneventful. And it actually speaks volumes about the maturity and robustness of our Bitcoin network after the halving event, right? So, do a quick recap of what difficulty adjustment is and why it is significant right now. As you guys probably know, Bitcoin miners use raw computational power to solve the block riddle, the block puzzle. This is what generates the next block. They solve the riddle, they get the mining reward. They prove to the world that they mine the block, right? Now, the amount of computing energy, the amount of resources, right? This is raw processing power, which they have to pay electricity for to process, that is committed to the network is referred to as hash rate or total hash rate. And the more hash rate that a miner has, it means the easier the blocks are to solve theoretically, right? Now, too much hash power would result in blocks being found too easily and therefore too quickly. And as Bitcoin is intended to have a new block minted roughly every 10 minutes, the difficulty adjustment is the mechanism designed to respond to the overall hash rate of the network. If blocks are being found too easily, overall hash rate is very, very high. The difficulty adjustment rises, right? Difficulty adjusts up, slowing the miner's work down, making it harder for them to solve the block riddle. Now, the inverse is true as well. If miners depart the network or turn their machines off and the hash rate drops, then finding a new block becomes more difficult. It takes longer than the intended 10 minutes. The difficulty adjustment adjusts down, the adjustment goes lower, and that makes it easier for miners to find the next block. And this is good for struggling miners. So this brings us to about a month ago, right? The Bitcoin Cash and Bitcoin SV blockchains were undergoing their own halving event, of course, a month earlier than Bitcoin itself. And this result, so post-halving, we saw again, many miners, the majority of miners on BCH and BSV become unprofitable. So they moved over to Bitcoin, where they would get a proportionately larger mining reward for contributing their hashing power to a mining pool. So they moved over to mine Bitcoin, the actual Bitcoin main chain, because that was far more attractive to the miners, because the halving on that network wasn't due at that point in time for another month. Back at that time, with less than a month to go to Bitcoin's halving, miners then flooded into the network, into the Bitcoin network, in attempt to get one last shot at collecting some of the last 12.5 block reward before the halving cut that subsidy in half to 6.25. And this resulted in hash rate getting pretty high, ballooning over the last month. And the last difficulty adjustment that took place 2 weeks ago jumped dramatically to reflect the influx of additional hash power. Difficulty adjusted up, making blocks harder to mine. This all adds up to the Bitcoin network accumulating a lot of hashing momentum going into the halving last week. And difficulty was also very high as a result. But immediately following the halving event at block 630,000, miners began dropping off from the network. But with the difficulty adjustment not for another week, the miners remaining on the network were left in an awkward position. With block rewards cut in half and the difficulty sky high, this first week post-halving turns into a pretty intense nail-biter, because the difficulty adjustment that is due to arrive and level the playing field to better reflect the current hash rate post-halving wasn't going to be for another week. That is today. So miners have dropped off since the halving event, right? The difficulty adjustment is also expected to drop off later today to compensate. Now, let's look at the latest data from Bitcoin's difficulty estimator, right? Today's difficulty adjustment is around negative 5.8%. Now, an adjustment to the tune of 6% is significant, but not excessive or indicative of any major issues to the network, even with us being in a post-halving environment. And this is where the cause to celebrate comes in, right? Many Bitcoin naysayers, you know who you are, warned that profitability post-halving is going to collapse, and as a consequence, miners are going to abandon the network in mass. They're going to collapse the hash rate. Difficulty is going to be set sky high. The remaining miners are going to struggle to even produce enough blocks to get us to the next difficulty adjustment. Dogs and cats sleeping together, absolute pandemonium. Right? Now, this, of course, describes the FUD known as the miner death spiral, or catalyzing capitulation of miners. We've discussed this on the show, right? We talked about this as a legitimate concern. But what the 6% difficulty adjustment to the downside tells us is that post-halving, Bitcoin has still managed to incentivize the majority of miners to remain aboard. We'll talk about a few reasons why. By reaching the first difficulty adjustment roughly on schedule. This does mean that we have survived what should be the worst of the post-halving mining environment. And with the difficulty set to drop later today, this means that mining is about to get a touch easier for the next 2 weeks. Meaning, miners who may have left the network last week might hop right back in by the end of day today, right? And by tomorrow, we might see a massive increase in hash rate. So with that said, we hope you appreciate a little better why today's difficulty adjustment is some cause for celebration, right? It does show that even in unfavorable mining conditions, the Bitcoin blockchain continues to hum along, problem-free, no interruptions, everything's fine, nothing to see here. Now, Oris Turdemeester, he's the founder of Adamant Capital, among other things. He was talking to Masari Research in an interview, this was published yesterday, which can be found here, and I'll drop the link in the description for this. But he says in this interview, quote, it's validating that Bitcoin is just like a perfect little clock, and it just keeps ticking, and we can rely on it, right? Good quote. Demeester took the opportunity to draw a contrast with another monetary construct, that is the traditional financial system, where central banks such as the Federal Reserve have unilaterally injected trillions of dollars of COVID-related stimulus into the global financial system this year. While central banks say that this intervention is necessary to save the economy and global markets from collapse, of course, we have to consider what banking officials are doing is effectively just making up monetary policy on the fly because they don't know what they're doing. Nobody understands global economic politics, just like nobody understands quantum physics. Quoting Demeester a little bit more, he said, it's such a contrast with the craziness in the central banking world, with all bets being off, who knows what's next. He kind of went on to talk about price targets as well. It's a pretty good interview. Meanwhile, in contrast, right, what makes up the Bitcoin blockchain, its monetary policy is hard-coded into the protocol, right? There is no emergency intervention by the spirit of Satoshi on the blockchain that is sensitive to the clamoring needs of the community or the miners, right? Instead, there are simple and universal and open source rules that the blockchain plays by, and that makes everything as predictable as a ticking watch. It is designed to keep the playing field even and fair to all participants involved, right? This is mathematical certainty. This is what Bitcoin offers to its operation and its monetary policy. And this stands in massive contrast to the, let's call it the funny money fiat systems that the central banks operate. Now, another important relief may well be on its way thanks to the difficulty adjustment as well, right? Block times have slowed down post-halving. Some estimates are putting the average at clocking in at about 18 minutes per block, and that has caused transactions on the network to back up. The mempool is not in a massive state of congestion, but it is relatively congested compared to what we've seen with the efficiency of miners. Here's the mempool size in bytes. The mempool size is relatively high. If we take a look at the Bitcoin mempool chart, which is the aggregate size in bytes of transactions waiting in queue to be confirmed on the blockchain, the backlog has started stacking up since the halving event, right? Now, I expect to see this start stacking down after the difficulty adjustment later on. Hash rate goes back up. But since transactions are backing up over the past week, senders looking to be included in the next immediate block for the purpose of a faster confirmation time for God only knows why. Generally, when you need to send a transaction on the blockchain, it's okay if it takes a couple hours to get there. But they have had to increase their fees to get priority. So fees have gone up a little bit on the network. So average transaction fees have risen to about $4.90. They were about $2.38. And this is the highest in 11 months. That's according to data from Delphi. Now, this is where today's difficulty adjustment comes in. If we make it easier for miners to find new blocks, the network should automatically bring block times back down to around 10 minutes. And this should result in more mining power coming back online again according to Delphi. But this is also just the mathematical certainty of Bitcoin. Now, Matty Greenspan wrote to clients in a newsletter on yesterday, that the difficulty adjustment should help to clear the log and return the fees to normal. All right. So again, this is relatively normal, nothing to freak out about. Right now you've got Bcashers and naysayers crawling out of the woodworks, but everything's totally fine. So Bitcoin continues along just like clockwork. And in some sense, this whole halving event and past week have actually been refreshingly dull. Okay. A few editorial notes here. This does not change the fact that overall that mining is still unprofitable. And my overall expectation is that we are going to see sell side pressure increase, which will cause Bitcoin's price to correct if we don't see a rally in price, right? If we see a rally in price, then moving forward, like miners have yet to fully adjust to the new normal, right? And to their credit, we haven't seen any panicking capitulation, right? This is good because all eyes are on the miners. Because you can see miners selling from a mile away. If the miners start dropping excess BTC onto the exchanges, that increases sell side supply. And because I don't know if I want to argue that the hype is dying down. It's really not. I'm starting to, everybody that I'm talking to is noticing like people that aren't normally interested in Bitcoin come around asking like, hey man, how do I get into Bitcoin? Which is either a sign of a bull run about to begin or the sign that a bull run's relatively over. I don't think that we're likely to see price back below 6,000. Again, maybe 5,500. I do think that if we do not see a rally relatively quickly, miners are going to have to kind of accept the new normal and they cannot, they're fronting right now, in my opinion, right? They know that all eyes are on them. They're bullish. I think the sentiment is bullish in the environment, and they are looking forward to a rally and price to go up, right? Miners are no less tied, right? Miners are no less tied to the dynamics of speculation than anybody else, right? It just depends, right? Not every single business operator runs their business like Jeff Bezos, and I would argue that Bitcoin miners even more so, right? So the idea that you can just accurately predict what miners will do is kind of silly. What you can do is look at statistical probabilities, right? Mining right now is unprofitable. With the difficulty adjustment going down, it'll be easier for miners to solve blocks, which will help. But that still does not reduce the production cost for the average cost of Bitcoin. Now, we don't know exactly, like you would actually have to look into, this is just an estimate, that average cost, production unit cost is an estimate. You actually have to go look at the actual efficiency of the operational cost. It's about to be the rainy season in Sichuan, and that is going to bring energy costs down. Bitcoin miners that are located in that region, which is a large amount of Bitcoin miners, are going to be able to negotiate better energy prices. So all of this does kind of lead us to miners being able to sustain. And I would argue that with this kind of run that we've had, I think that a lot of miners are well capitalized and have a nice cash buffer, right? So I think we'll be okay, right? Less well capitalized miners, it just all depends, right? If we've got a good chunk of miners out there that aren't well capitalized and they feel pinched because the new difficulty adjustment, if price stays around 9,000, then it's more likely that we correct down to 6K. What we need is a nice, strong, sharp rally up to about 12K, right? Pushes miners to be profitable. I would say that forms a new shelf of price, and we can start pushing up from there to new all-time highs, right? But we got to form that new shelf first at about 12,000. That keeps the miners happy. That keeps investors happy. That keeps everybody happy. You're already starting to see more retail interest pick up. So it's an interesting area, right? Long-term, everything's bullish. In the short term, it really depends on what unprofitable miners do in the short term, because eventually those with the smallest cash buffer, if price stays right where it is, are going to feel the pinch eventually, right? And they're going to have to start increasing sell side flow. So rally or correction? Let me know your guys' thoughts in the comment section down below.